Hi, welcome to the Market Alert for Friday, the 24th of February 2023. So ODTE call buyers rescue stocks from CTA slam, bonds are bid. ODTE are options contracts that have less than a day to expire. So today is expiration day for the options. A battle of CTA, that's Commodity Trading Advisor, selling versus the ODTE call buying in the face of hawkish macro and bullish macroeconomics. Stocks firmer after hot labour market data and PCE revisions shrugged off. As ever, if it's revised or shrugged off, then the market moves up. Stocks finished in choppy session in green after reversing the initial data induced losses. So yeah, bad news again yesterday, but doesn't matter. We'll just turn it around, shrug it off and move the market to the upside. Today we've got 130 core PCE price index. That's out at 130. So again, we've got more inflationary news. It'll be interesting to see if it comes out higher than 0.4. 3 p.m. we've got home sales, revised consumer sentiment, and day 3 sees the G20, or the day 3 of the G20 meetings there. Okay, let's have a look at yesterday's market action, and we'll kick off with the Dow. So in the Dow, you can see in the daily chart the market finding a bit of support from the left there. There's quite a bit across here, and the market also hitting the 78 going through it. The 89 hasn't been hit yet, but there's always a chance that that could occur. Dow looking very weak compared to the other markets, particularly European, the DAX and the FTSE 100. Nonetheless, it managed to stage a recovery yesterday. I'll look at the 30-minute chart. You can see the selling coming in just after 3 o'clock, all the way down to the S2, the market finding support, becoming oversold, and then doing a V-shaped correction. Not unusual, as can be seen so many times this week, in fact in smaller time frames, in particular 5-minute on the DAX. Market's been sideways overnight, sitting on the close. The high is only 100 points away, and there's no issue this morning with any economic news, so why wouldn't the market make its way back up to test the high of yesterday. In the Dow implied volatility, this also dropping down yesterday to 1609 from the day before. We can see there that we've dropped down from 1690 down to 1609. So that moving in the right direction to the downside to also remove any element of so-called downside risk at the moment. The lower this number goes, the better. As I say most mornings, we want to see the implied volatility down in these sorts of levels, particularly 14 area, and the market then make its correction. It's tried, but so far failed to do so. In the German DAX, the demand for the day before obviously paid off. Market moving higher yesterday. It's also starting to move higher. Watch the 89 today and the 78 as the market is very, very much likely to go through these areas. You've also got the two highs to the left. We've got this one and this one here as well. So let's mark those on the chart so that we've got a reference for when the market starts to move to the upside during this morning. It may shake out initially, just a wrong foot a few traders, but as there's no geopolitical news or black swan events that are appearing at the moment, then the one market, particularly the German DAX, is going to continue to move to the upside. In the 30-minute chart, also you can see yesterday we moved higher. We had the shakeout down to the previous day's high. As I've said before, the high becomes the support once it breaks through. If the market comes back, it came back yesterday afternoon, 50 EMA, and then the market back up to the high as well. The moment overnight, the market moved lower initially, but has already started its move to the upside, and it's the high of yesterday that is going to be under attack. To take this out is what you want to see in a bull market, so that each day the high is, or the previous day's high is taken out, and that's what we want to see during today's trading session. 5-minute activity for yesterday. Market sideways in the futures, cash market moving up, then selling off, and then we see the market trade sideways for the next hour or so. Manages to move up a bit. Then we get to the 1:30 news, bit of a shakeout, and then we move up with the Dow. That stopped in its tracks, and then the market has moved all the way back down to the high again where it found support overnight, and the market moving up. So overnight we're above the DP. We've had the buying come in, and now we're making our way towards the high. Like I say, don't be surprised if the market comes back to the 200 MA or the close to have a shakeout, get rid of some of the weak longs, and then move the market up to the high during the morning session there. In the S&P, market's up yesterday as well, back above 4,000, which is important for this market. Bit of weakness overnight at the 50 EMA for the S&P. This is what it looks like for yesterday. The market sideways, then moving up in the electronic. Then the S&P official opens on the CME, and we see the market trading down to the previous day's low. And surprise, surprise, the market finds support and then moves back up. And then in the overnight market, we're sitting on the close with the high not too far away, but it's got the 200 MA in its sights at this level as well, so expect some resistance should the market move up to this point. In the FTSE 100, still consolidating, inside bar for yesterday, fairly quiet, and overnight the market struggling to get above the 5-bar moving average as it has done for the last 3 days. In the 30-minute chart, the market down in the early part of yesterday, then it rallied with the DAX. Then it sold off with the Dow, and then rallied with the Dow when it made its V-shaped correction back to the high of the initial part of the session, well, certainly 89% of that move. The market's actually traded up to the high on the FTSE on the electronic market, which we can see, and it's now just moving down a bit. And we can expect some volatility in these markets going into lunchtime because of the option expiration as well. So keep that in mind around 1:30 when the options market starts to unload their options, and there's going to be a couple of trillion that's going to be needed to be offloaded. That seems to be the value of these derivatives these days. In the GBP JPY, this also down yesterday, down on the overnight, but managing to bounce off the 50 EMA. This is how it looked yesterday. We had the sell-off down to the 200 MA. We had demand coming in, we had the crossover, we were oversold, and then we rallied up to the DP. We then were overbought, crossover, and then we saw the market make its way back down towards the S2, where it bounced a little, and then overnight in the Far East it's been quite volatile. There's some Japanese news out there with that bar, but otherwise it's settled, and the market is now making its way back to the DP. The GBP USD or cable is sitting at the 38.50% retracement from here back to here, and finding a bit of support. But the dollar continues to move on the upside at the moment, which you'll see in just a minute. And overnight we've still got some weakness, which we can see in the 30-minute chart. Yesterday the pound moving lower along with the DAX and other markets. Then you've got the 1:30 news from America, then the Dow moving lower, the dollar moving up, and then the market trading in a range overnight. Bit of volatility there, and the market trying to hold at the close, but that's going to be dependent upon the dollar, which we'll have a look at now. And a US dollar daily chart, you can see that we're still moving up slightly there. 30-minute charts over the last few hours. Again, you can see yesterday when the Dow took a tumble, the dollar moving to the upside, but overnight the market's just consolidating. Did gap lower, but is so far holding sideways, but still showing a bit of strength there in the last 30-minute bar. In the metals, as I said yesterday, the market was going to take out the previous day's low. It did it in style. And the same will happen today as well. We're heading for the 200 MA in this market. I'll just bring this up so you can see it. And also, I suspect we're heading down towards, what's the price there? 23, no, it's not 23, that's the date. 2093. So let's go to the 30-minute chart. We'll have the BRNs in there. That's better, so we can actually see. So we're looking at $21 are in this market. This red line is going to be very important at the S2. That's where the market's going today. It's currently sitting on yesterday's low, but with the dollar strength at the moment, it'll be no problem to slam this market down 25-30 cents, which is what they did yesterday. Notice everything was fine. We've seen this pattern so often that the market's allowed to move up in the overnight pre-market COMEX, and then as soon as the LBMA opens with the news, they just hammer it. And that's what we're seeing again now. That pattern has returned. The manipulation of the market has returned. It's, again, incredible that silver is actually 70 or 80% cheaper than it was in 79, and yet everything else on the planet is 300 to 400% higher from that period of time to now, but silver is still 80% cheaper. So if that isn't manipulation, I don't know what is. Gold sideways to higher for yesterday, and again you can see the hammer in there, but it's not as bad as it is in silver. We'll just have a quick look at the gold silver ratio, and there's your answer, that silver's being hammered as the gold silver ratio starts to move back to the upside there. Let me just scrunch this up a bit and have a look see. So the 90 area for this market is let me just get rid of that. The 90 area is where there's some sort of resistance in this, so there's plenty of room for this to move higher and be slammed down below $20 an ounce. Okay, that's it for this one and for this week. Let's see what these numbers are going to be like at lunchtime. Like I say, there's no news up until 1:30, but then at 1:30 you're going to get the expiration of the options as well. Keep that in mind. Should be some volatility. They'll try and pump the market to the upside with that in the electronic Dow when it opens as well. Okay, that's it. As ever, thanks for watching. See you in the next one.